economic calendar, going through our trading plan. Friday, the 12th of November. So we see all these reports of medium importance coming out from the various countries in Europe, Greece, Portugal, GDP. They are medium importance, and that's already come out. The British nationwide consumer confidence that came out just after midnight. Let's just go down. And then at 7 o'clock, which is in about 15 minutes, we have the Euro-German GDP report coming out. So that could probably affect the market we're concentrating on, which is the Euro-US dollar, because the main currencies we're looking at is the Euro-US dollar and the pound dollar. So that's coming out at 7. Then the big one is coming out at 10. That's the Eurozone GDP, and that's a report of high importance. So that's coming out at 10. And the last report of importance for today is coming out at 2:45. That's the U.S. University of Michigan confidence report. So that's another report of high importance. So there are lots of reports due out today. The first report of importance is at 10. So again, we're going to tread very, very carefully before 10. And the next report of high importance is at 2:55. We'll meet again at about 2:45 just to have a look at the market and see what we can do before the last report of importance comes out. Now, obviously, if you're a very cautious trader, you could probably just keep out of the market till 2:55 and not trade at all till then. And usually my trading plan is to trade or place pending orders just before the reports come out, and if I lose out on those trades, then I'll stop trading till after the last report comes out. So we'll go ahead and place our pending orders in appropriate places in the market, see what happens to that order before 10. And like I say, if it gets taken before 10 and we get taken out and we lose out on that trade, then we'll just stop trading till the last report of importance. So again, with time, you personalize your own trading plan and you decide whether you're going to be very cautious and just not place any pending orders till the last report of importance, or whether you attempt to trade before the report of importance comes out. But the important thing is that even if you do attempt to trade, once you have one live trade before that report comes out, make sure you don't place any more trades till the last report comes out. You certainly do not want to exhaust your 3 attempts at the market before the report of high importance comes out. So that's very, very important. Always remember, regardless of what happens in the market, regardless of whether reports are coming out or not, after 3 consecutive losses, you stop trading. So basically, every day you only have 3 stabs at the market. You only have 3 stabs at the market. You know, that's the most important thing, is money management. As you've seen so far this week, the fact that we've applied good money management, we haven't been over trading. The first goal of money management is long-term survival. That's the first goal of money management and trading, is long-term survival. So we haven't blown our account. We've still survived till today, Friday, and we still have enough money in our account to start trading again next week. So that's the first goal of money management. So always look at it that way. You've got 3 stabs at the market because you know after 3 consecutive losses, regardless of what's happening in the market, you're going to stop trading. So you decide when to use your first attempt, when to use your second attempt, and when to use your third attempt. Obviously, remember, once you achieve your profit target, you stop trading. So after your first successful trade, you just stop trading for the day. But you've got 3 attempts to have a successful trade. So what would be ridiculous is if you exhaust your 3 attempts before the last report of importance comes out. And again, like I say, you can decide whether you will, use your 3 attempts after the report comes out. So that's the beauty about trading. You decide. So like I said, I usually attempt or use one of my attempts before the reports come out. And then if I lose out on that, I save my last 2 attempts till the last report of importance. Okay, let's go to the markets. That's the Euro US dollar. Again, we start with the 1-year daily chart. We'll look for swing trading opportunities. And we can see the Euro US dollar initially trending up, got to the 23.6% retracement, broke it, and then came straight back down and broke the moving average 50 there, and it's been falling. So for some of you guys who sold just below the moving average 50, you'll be in a swing trade there. So that's one opportunity to have placed a swing trade, is just below the moving average 50 there. Obviously, if the market decides to go back up, obviously for those who sold just below the moving average 50, they should have moved their stop loss to the opening level by now, because the market has moved over 100 points in your direction, and your target could be the next retracement. So at the moment, that was an opportunity to swing trade just below the moving average 50 there. If the market turns back up and starts to go back up, you can buy at the 23.6% retracement. Obviously, if it keeps falling, you can sell at the next retracement. Obviously, at this point in time, there are no obvious swing trading opportunities. The last one was yesterday, where you could have sold just below the moving average 50. Okay, so we'll come to our day trading. Again, we know that this reports are due out at 10 o'clock, especially the first one that will be affecting Euro US dollar. Again, we know that the market tends to trend sideways before reports of high importance, tends to, so you can see it's trending sideways. And obviously, we want to try and keep out of the sideways trend. So the best place to place our pending orders now will be, let's stay clear of the sideways trend. So rather buy just above the pivot point at 13,686, or just below the first support at 13,544. So that way we're well clear of the sideways trend. So if the market just keeps trending sideways till 10, then that's fine. We'll just leave our pending orders where they are. Obviously, if the market decides to take off before the report comes out, if it starts to go up, we'll buy just above the pivot point, and if it collapses, we'll then sell just below the first support. But in the meantime, we're just going to keep out in between that. So that will be where we'll place our pending orders, 2 points below the first support and 2 points above the pivot point for now. So that's the Euro US dollar. Then for the pound dollar, again, we can see the pound dollar, it's not been trending well really, but it's been going up in a haphazard fashion. It's getting close to the 38.2% retracement. So from a swing trading point of view, the market reverses and goes back up. We can buy at the 38.2% Fibonacci retracement. If it keeps falling, you can sell just below the moving average 50, or you can sell at the next retracement. Now, from a day trading point of view, and you can see the market fell down there, made a low at 16,081. Made a low there at 16,081, went up, came back down there, and made a low again of 16,081, and went back up. So it formed a support about at that point. So that was a support in the market at that point. Obviously, if you were up very early in the morning, you could have sold just below the support of the market, but that's gone. And obviously, the market has also broken the first support. So at the moment, if you didn't sell at the support of the market, and like I said, the market has also gone beyond the first support of using the pivot points. So at this point in time, you can see that although the market is now below the first support, you can't use that as a resistance now because the moving average is still way above the first support. Always remember, you buy above the moving average 50, you sell below it. So the only place you can buy above the moving average 50 is the pivot point. So we can place a pending order just 2 points above the pivot point at 16,123. But in terms of sell, we don't have any decent sell opportunities. Again, remember, when you're trading with the pivot points, we only use the pivot point and the first resistance or the first support. So once those are the safe places to place your trades, pivot point, first resistance, or first support. Once market has passed that, you don't use the second support to trade. That is very, very risky. Obviously, if the market forms a support itself, we can then use that to trade. And what we can do is just put a line at the recent low point there, which is 16,044. And then see what happens. Again, you can see this is all bunched together, so I wouldn't say that's a support in the market yet. They're just all bunched together. Again, like I said, I like there to be some clear distance between it before you then say it's a support. So wait and see.